We are here to analyze the investment potential of Shadowfax Technologies Limited, a critical player in India's logistics revolution. This company is perfectly positioned to capitalize on the explosive growth of hyperlocal and quick commerce. We believe Shadowfax offers a unique opportunity to invest in the future of last-mile delivery. We will break down the financials and the market dynamics that make this IPO compelling. Let's start by understanding the core business model. Shadowfax is not a traditional logistics firm. It is a technology platform built for scale and speed. The company operates on a purely asset-light model, which means low capital expenditure and high flexibility. This model allows them to rapidly scale their network to over 15,000 PIN codes using a massive pool of 3 million delivery partners. They dominate the hyperlocal space, but their true value lies in their exposure to the high-growth quick commerce segment. Now, let's look at the specifics of the IPO itself. The market is already signaling massive demand for this offering, making the IPO details highly attractive. The issue is sized at just over 1,900 crore rupees. But the key metric here is the grey market premium. The GMP has cooled significantly to just 10 rupees. But this focus on fundamentals over listing hype is actually a positive sign for long-term investors. We see a tight price band and a reasonable market capitalization, setting the stage for a stable listing based on the company's financial merits, not just speculation. This shift in sentiment allows us to focus on the company's recent financial performance. The financial data tells a clear story of a successful turnaround, moving from high-growth losses to sustainable profitability. Shadowfax grew revenue by 32% year-over-year, maintaining a strong growth trajectory. Crucially, they achieved net profitability in FY25, posting a profit after tax of 6.4 crore rupees. This shift is validated by the significant improvement in their EBITDA margin, which moved from negative territory to a positive 3.4%. This financial discipline is what separates them from many high-growth peers. Let's see how this performance stacks up against the competition. When we compare Shadowfax to established players, the investment thesis becomes even clearer. You are buying growth at a value price. Shadowfax is growing twice as fast as Delivery and 4 times faster than Blue Dart. Despite this superior growth rate, Shadowfax trades at a 20% discount on a price-to-sales basis compared to Delivery. While their PAT margin is currently thinner than peers, the valuation discount and explosive growth potential make this a compelling entry point. Next, we will analyze the key risks and opportunities facing the company. We've established that Shadowfax is growing faster than its peers at a lower valuation. Now we must weigh the risks and opportunities that define the long-term outlook. The core message is that the quick commerce tailwind significantly outweighs the risks associated with thin margins. The biggest strength is the asset-light model and the leadership position in hyperlocal delivery, allowing them to scale rapidly without massive capital expenditure. But we can't ignore the weakness. Net margins are razor-thin at 0.26%, making them vulnerable to cost shocks. The massive opportunity is the explosive growth in quick commerce, a sector that demands the speed and hyperlocal density Shadowfax already provides. And here's the key threat. Regulatory changes for gig workers could dramatically increase their operational costs. We believe the quick commerce opportunity provides enough upside to justify the risk. Let's now look at how this risk profile translates into specific recommendations for different investor segments. Building on the SWOT analysis, we can tailor our recommendation based on investor profile, recognizing that risk tolerance varies widely. For young investors, the high-growth, tech-centric trajectory aligns perfectly with a higher risk appetite, making this a clear BI. Conversely, retirees or conservative investors should avoid this IPO. The low listing premium and thin margins are unsuitable for capital preservation. For those with high disposable income, we recommend to accumulate. They can afford to hold through the inevitable volatility for long-term compounding gains. This segmentation helps us move beyond a single blanket recommendation and acknowledge the nuances of the current market. Now let's refine this further by looking at specific investment strategies. The recent cooling of the grey market premium from over 100% to just Rs10 fundamentally changes the short-term calculus for this IPO. For short-term or listing investors, the low GMP offers a minimal margin of safety, so we must be cautious. The expected gain is now only around 8%, which is not compelling enough for a high-risk listing play. However, for long-term growth investors, this is still a strong BI. Shadowfax remains a structural play on India's digital economy and the quick commerce boom, and the fundamentals of their asset-light model are unchanged. Value investors should remain neutral. The 0.26% PAT margin is simply too thin to justify a value investment, so they should wait for demonstrable margin expansion. This nuanced view ensures we are not chasing short-term hype, but focusing on long-term value. Let's summarize our findings and open the floor for questions. In conclusion, Shadowfax presents a compelling investment case driven by a powerful turnaround story and significant market tailwinds. We see a high-growth logistics play with over 30% annual revenue expansion, making it a leader in its segment. This growth is priced attractively at a 2.88x price-to-sales multiple, which is a discount compared to slower-growing peers. While the initial listing frenzy has subsided, the measured sentiment, with around 8% potential listing gains, suggests a more rational market entry. We believe this IPO offers a unique chance to invest in the future of Indian hyperlocal logistics at a reasonable price. Thank you for your time. I am happy to take any questions you may have.